Stock investors calmed down this week after Fed Chair Jerome Powell's rate cut restraint message cooled the Trump trade. Enthusiasm that pushed Wall Street to records. The world's most prominent central banker is in no hurry to ease monetary policy due to a solid labor market and strong economy. That pushed bond yields higher, dragging stock markets down. The S&P 500 lost half of its election year gains in 5 sessions, falling 2%. This week's pan-asset fall, which included corporate credit and commodity losses, was the worst in 13 months. Elevated valuations are a key concern across near-record assets. The worry is that the current market setup, it leaves little room for errors should growth disappoint or inflation pick up again. Cross-asset valuations in real terms are now higher than 88% of the time in data, going back to in 1962. Stocks fell with the S&P 500 unable to hold gains over 6,000 points. The Russell 2000 Small Cap Index, a major Trump trade position, fell 4% to mark the worst week in almost 2 months. The Nasdaq 100 fell ahead of Nvidia's much-awaited earnings next week. Crypto tracking exchange traded funds suffered withdrawals for the first time on Thursday in the latest charts bursting rally. However, Bitcoin has gained over 30% since election day. On Saturday, the top token was once again on the surge with more than 3.5% gains. On Saturday to trade above $91,400. The OG token is probably the only exception at this point to a weakening Trump trade trend. And well, for more on this, we're now being joined by Mr. Andrew Holland from Mumbai. He is the CEO of Avendus Capital. Welcome to the broadcast.
Good morning.
Good morning to you, Mr. Holland. First up, what is your outlook for global markets right now?
Yeah, no, I think you've summarized a lot of the headlines overnight, but I still think that the only game in town at the moment is the US because of the potential tax cuts and the earnings growth that will unleash for the US is very strong indeed. Which will probably mean, given where bond yields are as well, is that money will continue to flow into bonds in the US, which keeps a higher dollar as well. So all of those factors, I think, will continue now. With the kind of usual ups and downs in between until President-elect Trump takes office in January. So expect volatility. Emerging market funds, unfortunately. For any passive fund out there, it's really going to be the US is the only game in town. So I think we're going to continue to see pressure on emerging markets, emerging market currencies, and sentiment in the next few months.
Well, Mr. Holland, do you feel that the Trump trade euphoria, it is now showing signs of fatigue?
No, I think it's early days. I mean, you've had a very good run prior to the elections anyway. Your markets were hitting near highs, and we've seen that since. So I would expect, you're going to have the kind of near-term kind of, falls along with what the Federal Reserve Chairman Powell said yesterday in terms of, I might go easy on the interest rate reductions, which again puts pressure on, emerging market countries again to stay pat in terms of their interest rate expectations as well. So, the RBI, as we know, is destined to have their monetary policy in December, and I think the odds now are probably likely that he'll remain where he is in terms of interest rates and look into the new year to see how things are starting to unfold from a global perspective.
Right. Also, do you think that Fed will be a bigger driver of markets or Trump?
I think it's a combination of the two because, what will happen is obviously going into President-elect Trump taking over in January is what the policies will be and, in terms of not just the corporate rate tax cut, but also personal income tax rate cuts as well, along with tariffs. So, that's a messy kind of picture. At one point, it's very, very positive, but for the rest of the world, it could be negative. So I would have thought the Fed then will have to see what those policies are. Are they inflationary? Is there a risk to growth before making the next kind of policy move? So I think it's Trump first, then the Fed.
Mr. Holland, my last question to you. What is your outlook for emerging market assets?
I think in the very short term, it's going to be difficult for emerging markets to kind of pick their heads up in terms of the policies which Trump has kind of stated that he's going to increase tariffs, particularly for China. So it's going to be the response from the emerging market countries, whether it's a weaker currency, whether it's more stimulus, which obviously would happen in China. And whilst India is relatively okay, we're probably the kind of cleanest shirt in the dirty linen basket. So that's how I would look at it at the moment. So don't expect a lot of flows to emerging markets between now and January the 20th.
Thank you, Mr. Holland, for joining us on World Business Watch with your insights.
Pleasure.